What is up? It is Big Chart Trades back with another video, and in this video I'm going to be breaking down the 4-hour PO3 in its entirety. I got some questions because my last video was about candlesticks, specifically open high low close and open low high close, right? The two different variations of candlesticks. So I thought I could open up the discussion a little bit more and make a video about the 4-hour PO3 because there's a lot of misunderstandings that comes to the 4-hour PO3. So in this video, I'm going to show you exactly how to trade it, how to use it, and everything you need to know when it comes to trading the power of 3, accumulation, manipulation, and distribution, specifically the 4-hour PO3, so you could start using it every single day in your trading. So in this video, the first thing that I'm going to do is I'm going to write out and give you a little bit of a lecture of how the 4-hour PO3 works. And then I'm going to go ahead and head into an example so you can understand it in real time and actually see how it works in real time. I'm also going to draw on the chart a little bit, and I'm just going to give you an entire understanding of how it works so you can start trading with it today. So what the 4-hour PO3 actually is, essentially what you're doing is you're entering on the 4-hour manipulation into a PD array on the hourly or the 15-minute time frame, and you're catching the distribution. Okay, so if you know about candlesticks, if you watched my last video, you know that in a bearish scenario, price opens, trades higher, trades lower, and then closes. Okay, let me make that red for you. And then in a bullish scenario, price opens, trades lower, trades higher, and then closes. Okay, so what you're doing essentially is you are catching this manipulation. So in a bearish scenario, price will open, you will catch this manipulation into this hourly or 15-minute PD array, and then you would enter and trade that distribution down, and this would be some sort of liquidity. This would be sell side liquidity right here, which you would go ahead and set your take profit at. And in the opposite scenario, price would go ahead and open, trade into an hourly or 15-minute PD array, and then you would enter here, catch that distribution, and this would be buy side liquidity right here, which is where your take profits would be. So this is exactly how the PO3 works. This is on a lower time frame. This is what the 4-hour candlestick looks like, right? Open, low, high, close, and open, high, low, close. Okay, so here's how to trade it. Okay, so basically the 4-hour candle opens, manipulates into a PD array on the 1-hour or 15-minute time frame. So that would be right here, right? You drop to the lower time frames. Okay, so if this is a 15-minute PD array, you are trading on the 1-minute time frame. If this is an hourly PD array, you are trading on a 5-minute time frame. So let me just write that out for you. So hourly PD array is 5-minute time frame, okay? And then 15-minute PD array is 1-minute time frame, okay? So that is just basic time frame alignment there. But what you're doing is you are dropping to that lower time frame, waiting for that SMT, that liquidity sweep, and then obviously the change in stated delivery would be your entry, and you would target these take profit levels. So now that you understand how to trade it and what it is, I'm going to show you it in real time because I know this can be a little bit difficult. So let me drop down to the hourly and find a PD array that makes sense so I can show you the actual entry model so you understand what is happening. And then after I do that, I'm going to get into, I'm going to dive a little bit deeper into what it is and how it works and the candlesticks. So yeah. Okay, so we are currently on the 4-hour time frame, and this is the 6 a.m. candle, right? So we trade the 10 a.m. PO3, so that's the next candle. But I'm just letting you know that we are bearish. Why are we bearish? Because price just traded into this 4-hour bearish fair value gap. So we're anticipating this 10 a.m. candle to be bearish. And do you remember what I said about bearish candles, right? How does it work? Bearish candles are open, high, low, close, right? That is a bearish candle. So how does it work? What are we looking for? If you remember what I said, we are looking for price to open, trade higher into an hourly or 15-minute gap, right? Internally, we want to see a liquidity sweep at highs. We want to see a SMT with ES, okay? And then what we also want to see, wait, let me just write this out for you. What we also want to see, what we also want to see is a change in stated delivery out of that PD array, which would be our entry, and then we would target resting liquidity down here. So now that you see this is the exact formation, I'm going to show you in real time what it looks like. So like I said, this is the 6 a.m. candle. And what is the next step? We're looking for a 15-minute or hourly PD array that price could trade into. So dropping down to the hourly time frame, what do we see here? We see this bearish fair value gap right here. Now, if you remember what I said, we are looking for price to trade into hourly or 15-minute PD array. We are on the hourly. Remember, the hourly time frame is aligned with the 5-minute, so we drop to the 5-minute. What are we looking for? We're looking for a liquidity sweep. We're looking for a SMT with ES, and we are looking for a change in state of delivery. So I want to see price take out a high. I want to see price have SMT with ES, and then I want to see price get that change in state of delivery. Just keep in mind, I am not on the replay feature for the ES, so I'm just going to assume that there's SMT at the highs. 10 a.m. 4-hour candle just opens up, right? This is our buy side liquidity right here. We swept this high again, pulling a little bit outside of this fair value gap, but that is not an issue. I'm assuming that there's SMT right here. Now, what is our third confluence? We need a change in state of delivery, which if you remember from my previous videos or my Twitter, you know that a change in state of delivery, a bearish change in state of delivery is a candle closure under the series of up close candles that swept highs. Okay, so these are the up close candles that swept buy side liquidity. So our change in state of delivery would be a candle closure below this level. Let's see what happens. You see how the 4-hour candle is green right now, but we're expecting it to be bearish. This is all manipulation. Let's see what happens. So with that new high, this becomes our new change in state of delivery level because it's the series of up close candles that swept highs. So that candle closure right here confirms the change in state of delivery. That would be our entry, right? And then we would just target liquidity. These lows, these equal lows right here. Okay. Now let's see what happens. Guys, another tip, whenever there are failure swings, you can anticipate price to take them out. So it doesn't matter what price is doing right now, price is going to take out these failure swings. Let's see, and right there, trade complete. $8 million. No, but in all seriousness, this was bad price action, but it still took out those lows. So do you see how this looks exactly like what I showed you? So what did I show you here with this drawing? I showed you, okay, this is the bearish candlestick. Price trades into an hourly or 15-minute PD array. We sweep highs, we have SMT, we get a change in state of delivery, and we target lows. Okay? On the hourly time frame, what does price do? Price trades into this hourly gap, right? Price trades into this hourly gap. We drop to the 5-minute because the 5-minute is aligned with the hourly. And what do we look for? We're looking for SMT. We're looking for a liquidity sweep. We're looking for a change in state. And what happens? We sweep buy side liquidity. We have SMT with ES. We get that change in state. And what does price do? Price goes ahead and absolutely dumps. And we take out this sell side liquidity, which is these equal lows right here. This sell side liquidity. We take it out. So that is the 4-hour PO3 in its entirety. I hope this video helped you. If it helped clear up what a PO3 actually is and how to trade it, then I've done my job. Now hopefully you have a little better understanding of what open low high close and open high low close are and how you can actually implement this into your trading every single day. If you're new to the channel, go ahead and subscribe, like this video, comment. It really helps me out. I'm going to make a ton of more videos just like this, simplifying these concepts so you guys fully understand them. Go follow me on Twitter. Go follow me on Instagram, on TikTok, everything, if you'd like, obviously. But I'm going to keep pumping out these types of videos. Hopefully this helps. Have a great day. Peace out.